Welcome everybody to Crypto Rosetta. My name is Savage. Today we're going to be having a look at Quant. This is going to be an update to our higher time frame count. Let's get into the charts and see what's going on. Okay, so in the previous video, we were going over a couple of different counts here. The main ideas that we're looking for is within the bullish case. What we'd be saying is we're going to continue to hold this $40.15. This would be our invalidation for this count. And what we're looking for is a bigger ABC pattern here, where this first leg here is our A wave. We're looking for an A, B, and a C to the downside. Now, the common zone of support for us to find for this B wave would be here between this 58.24 and this area here of the 77.99. Now, we have already come past this 50%, so we need to be on the lookout for that potential of a reversal. We have also moved past this 0.618, which is a rare target for a C wave, and we have broken this A wave low. So we need to just be on the lookout here that, if we do start to see some price action back to the upside that starts to break some of these highs, we could be looking for a breakout. Now, if we are looking for this idea, what we'd be saying is that we are within the C wave currently, and the way that I would be looking at this C wave is that potentially this is actually going to be playing out in a diagonal pattern. Now, within this idea of the diagonal here, what we'd then be saying is that from further back here, this move would actually be 1, 2, 3, 4, and then we're looking for this as A, B, and C to the downside. Now, invalidation of this as a diagonal would actually come by crossing this $83 here, and if we cross $83, then the probability is that we're actually getting some extension within these waves, and we have to be careful of the more bearish case, which is this white count over here. So we need to be just a little bit cautious that if we do start to push past this 83.04, we could be experiencing a bigger push to the downside. Now, it is always possible that within this bullish count, instead of looking at it as A, B, and C, it is possible we could then argue that potentially we had this as an ABC into here, something like a triangle, and then we're still looking for another leg down. So I will still be looking out for this potential that if we do push down towards some of these lower levels, this could still be valid as a count. But what we then need to see is a 5-wave move to the upside, and what we'd be looking for would be a move potentially towards this 549. If we do see this become an impulsive structure, we'd be looking for this 1607 as a confirmation for that third wave, and then we'd need to see an additional 4th and a 5th to confirm the bullish structure here. Obviously, within this idea, like I said, this is going to be our key support area here, and I want to see how we react. Now, we also discussed the potential that we could see something like this, where this whole move is potentially a bigger triangle, where what we'd be saying is that this is our A wave, this is our B wave, and we're looking for this once again as potentially an A, B, and a C. So if we do see a push down towards this 77 to the 73 area, I'm going to be watching this level as a potential reaction zone, because this would be a common zone we'd get a reaction within a triangle. Now, if we are looking at this idea here, where this becomes A, B, C, D, and E, this would actually be looking to break to the upside, as we can see with the green arrow here. So what we'd be expecting is that if this is a C wave, we'd move into this range. Now, the common zone is at this 0.618. But if we do move down towards this 0.786, this would also still align with the idea here if we do get good structure to the downside. Now, if we do see something like this, where this becomes A, B, and C, what I'd then be looking for is a 3-wave move back to the upside here, looking to potentially target out this 157 to this 151. This target would change if we hit these lower targets here, and could actually mean that this D wave is going to be lower down, where we could see something like this 141 to this 135 area. But I'm just going to leave this here for now and see how we react from these zones. Now, if we do see this 3-wave up, then we'd be looking for 3 waves down, and then we could be looking for that potential of a rally to the upside from this area. So this is why we need to just be a little bit careful of this triangle idea. We only get confirmation once we form this D wave, so it is early days in looking at this, and there are other ways of reading this as a triangle. Now, within our bearish count, what we'd be saying is that effectively this is either W, X, and Y, and we're going to see either an A, B, and a C to the downside, in which case our minimum requirement is going to be here at this 4881 based off of this X wave high, and our 1-to-1 is down here towards this 1881. Now, the other way we could argue that this is taking place is that this could become 1-2, and then we're actually forming another 5-wave move here for 3, 4, 5. So instead of this being WXY, it could also be A, B, and C. Now, within this idea, what we'd be saying is that if we do get this as a 3-wave move down, we could see another 3-wave move up, followed by a 5-wave move to the downside. So any kind of a bounce from where we currently are, which fails to push back above this 184, we need to be careful for this more bearish idea where we could still be looking for this continuation to the downside here. Now, it is possible within this idea of this being an X wave that we could have this as a triangle. So we need to just be on the lookout for that idea as well, because if this is a triangle, what we'd be then saying is that instead of looking at this as a 5-wave move, we would say that this is A, B, and C. And then we'd be looking for, once again, the same idea here, that this is A, B, and C to the downside. That area of that 77 to that 73 is going to be a zone I'm going to be keeping an eye on. If we do look to continue to push down into these levels, it could be quite an interesting zone to see if we find support coming back into this little area here of the 67 to the 79. That could be quite an interesting zone to see if we do get a bounce. Now, within this idea, what we'd then be saying is that it would be very early days in trying to identify this, because we wouldn't have even formed the B wave. But what I'd be looking for is a 3-wave move to the upside, followed by a 3-wave move down, 3-wave move up, and then a break to the downside. So this would be looking to just extend the price action sideways for a longer period before actually having a sell-off down. So there's a couple of ways, like I said, of looking at this move currently. We need to be very careful. It is also possible that we could form something like a diagonal here if this is going to be ABC. So we need to see what happens if we do see price continuing to move down here. If we start to break down in a bigger way, though, we need to be very careful of this idea here where this could be developing into a 5-wave move. Now, if this is developing into a 5-wave move and this is 1, 2, the most common target we look for wave 3 would be this 40.59. So if we do see price looking to break down, where either we're starting to form this as 1, 2, 1, 2, or we're looking at this as a diagonal, we get 3 waves up and then we continue to push to the downside. What I would then be looking for is, like I said, this 40.59. Need to see a break into this zone, followed by a 4th wave and a 5th wave. And this would align quite nicely with that bearish idea where we could be looking to push down towards a zone of the 786 to this 854, which could also align quite nicely with coming back into the channel. Obviously, the longer that it takes for this to take place, the center of this channel is going to drop down as well. So we need to just be aware of that. So those are the different higher time frame counts that I'm looking for at the moment. I am looking for this idea to actually play out here as this diagonal. This is the most likely option in my opinion. If we, however, move past this 83, it then becomes more likely that we're actually starting to get some extension in here, and we'll have to have a look at these subwaves a bit closer and try and figure out what's going on. But until we actually do, we have come down here to this 0.382 level of the wave 1 to 3 of this internal white count here. So I'm just being mindful that, you know, if we start to see some price action holding these lows here, we could start to build something to the upside. Whether this manages to break out of these trend lines, or whether we just get a move up and a break back to the downside, or alternatively, if this fails to break up at all, we could potentially just be looking for that direct sell-off and this looking to extend to the downside. Yeah, so we need to just be careful. Like I said, 8304 is going to be an area that we're looking for here as a potential invalidation point for this idea. But the higher time frame idea would remain the same. As long as we remain below this 161, we need to be careful that we could be developing this 3rd wave. If we do start to bounce from this area, then we're going to be following that idea of either the bullish count here, where we could be looking for a C wave, but we would need to see 5-wave structure here to the upside. And if that isn't the case, then we would be looking for that potential that we could see a bounce in a 3-wave move for a leg of a triangle. And then we'd have to watch how we react from there to try and get a better picture of which of these counts we are in. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash the like button, hit that subscribe button if you haven't already. Turn on those bell notifications so you never miss a video. Leave us some feedback down below, and also in the description you will find a link to the Discord. Come check it out. It's free to join. Everyone have a great day. We will see you in the next one. Take care.